are you making us better, faster, smarter, cheaper? Are you taking friction out? Are you lowering the expenses? Are you improving risk selection? Are you mitigating losses or preventing them? And if you're not doing any of those things, I'm not sure what value it brings. I'm seeing a lot, unfortunately, where they've come into the place sort of trying to disintermediate or disrupt the process, and they may have tools that make something easier for one of the parties in the transaction, but they're really just layering on. The insured's not going to win in that formula. Hey, this is Scott Whitehead from Markel Insurtech Underwriters, and this is the future of insurance.
Scott, it's really good to sit down with you and do this. I think I asked you, I don't know, like a year ago, and every time we've talked, we've gotten taken off track, but we're actually making this happen now. So it's good to do it.
Yeah, good to connect, and thanks for having me.
You fielded a call or email from me, kind of out of the blue, some random guy asking about Thimble when I was writing a case study on them, and I didn't know if you'd respond. I didn't know how you'd respond, because I was asking you, like, I want your side of the story, and I want to put you in a book, and you said yes. Very positive and surprising. But digging into that, I started to learn a lot about what you've been doing, and it's really cool stuff. So I'd love to hear a little bit about, like, what is Markel Insurtech Underwriters? Who are you? And then start to pick your brain a little bit about where things are going.
Yeah, and Thimble's a fun one because that was one of our first partnerships, and that's been a good ride. But to sort of take a step back, Markel Insurtech Underwriters was established about 5 years ago. Actually, this month, I think, is our anniversary.
Happy birthday.
Thank you. But the point of it was really just to engage and embrace with this wave of talent and intellect and money coming into the space.
Yeah.
And what I would say in typical Markel fashion, we're always looking for better ways to do things. So if people want to come in with fresh ideas, we want to see how we can help make that happen. And so, but what this is specifically is it's a programs unit. And so in all of our relationships, our partners are digital agents or our licensed agents, and they have the technology and the distribution strategy to offer the product. So our role is the paper, the capacity, the balance sheet, some of the plumbing, and of course, varying degrees of the underwriting expertise. So that really the common denominator is the automated underwriting, all different types of products. We write personal lines, commercial lines, admitted, non-admitted, and we can even participate as a reinsurer. And so what we decided to do back then was to set up a separate unit. And the reason we did that is because we didn't feel like we could do it successfully off the side of our desk.
Yeah.
Right. When you have a startup with a new idea or a new opportunity, I mean, as exciting as it is, it generally starts at zero.
Yep.
At least meaning $0. So then it's hard to prioritize against against the other conflicting priorities and resources in a huge multi-billion-dollar company. So we had to have a little different set of rules, right? So we have a separate P&L, we have a separate budget. We have, in some cases, we have separate resources, but we certainly tap the resources throughout Markel. So there's a clear message from the C-suite and upper management that we were going to have to streamline some processes to get some things done. But by setting up a startup unit, we also had a shared sense of urgency with these startups. We could go out and say, this is what we're focused on. We're in this for you, and we're trying to do this faster and better than we could without a separate unit, but also than our peers, to be honest.
Yeah.
So fast forward 5 years, we have 10 or 12 different programs and some pilots we've done, some successful that have turned into programs, some not, and lessons learned. But it's been a good run, and we're finally contributing both from a top and bottom line perspective.
And I feel like when I talk to different startups and like InsurTech MGAs, invariably, like, everyone has at least heard of you, but many either are working with you. Like, we talked about Counterpart was another one. So that's two that, I've had Thimble in the book and on the show. Counterpart's been on the show. But then there's lots of others who, like, yeah, we pitched to Scott, or, Markel was looking at it. Like, you seem to be in this position where a lot of folks know that for capacity, for support, for getting up and running, it seems like you get to see pretty much everything that's brewing out there or close to it. I don't know, is there a niche or a flavor to the kinds of things that generally you're looking at?
Well, I mean, certainly I appreciate all of that. And, it's easy when you get to trade on a big company's balance sheet that has a good
Yeah.
reputation for being forward thinking. And we are a big conglomerate of specialty niches, right? We're a specialty market. So when these interesting niche programs come up, we're often a good fit. And like I said, we have a lot of tools in our toolbox as far as different papers and different ways of underwriting, including reinsurance and fronting paper with our friends at State National. But yeah, I mean, so for us, it's really, is it interesting? Do we feel like it's actually going to solve a problem? And it's not just, a tool running around a solution running around looking for a problem.
Yeah.
And then, can it scale? First, can it scale on its own, to be meaningful from a top and bottom line perspective? But also, are there lessons to be learned that could be applicable to other places inside of Markel? I mean, sometimes there's secret sauce that really can't be shared across other different product lines, but there's always things we can learn. And it's more than just the underwriting. It's, about compliance and the regulations, and it's about distribution and, how you can sell and when you can sell. And so, each one of these things we talk about, each pitch we hear, we learn something else, and it builds on it. So, but I do think we've gotten a reputation for getting things done. I also would say that, while my team is exclusive to Insurtech programs, we're not the only ones focused on Insurtech, right? There's lots of off-the-shelf products that we're distributing through APIs and with digital partners. We have a personal lines team. Most of their products are actually automated, so they certainly engage with Insurtechs. And we have a reinsurance division that backs some Insurtech. So, while it's all not seamless and we don't share everything, there's different angles to access us. And when something comes in and I say, hey, that actually sounds really interesting, but it's not a fit for my team, let's make an introduction over here because it may work somewhere else.
Yeah.
Or maybe a faster to market. So
yeah,
we see a lot for sure.
You've talked to me in the past about kind of why, and this has come up with other folks in the show as well, but why it's maybe harder for an incumbent to go after something totally new and, be a first mover. And that, that's sort of a good domain for some of the startups, and that's sort of the point of them. How is that part of the strategy? Is that's a way for Markel to try to move the market, try to be in new ways of approaching risk or distribution or a new segment, without necessarily going at it from the core balance sheet, and like you said, trying to do it off the side of your desk when there's other stuff that right here, right now makes a lot more sense to put your efforts into.
Yeah, I mean, I think that's the big one that we've hit on is when you're competing against other priorities for resources, it's difficult. Our IT department, our legal department, our product and regulatory services department, the product development department, they don't have a lot of downtime built into their budget for new things to come up, but inevitably they do. So again, by setting up separate unit for it, I think it just paves the way to be a little more agile, a little more flexible. I mean, the other side of it is really just, startups by their nature aren't super attractive to incumbent carriers. I mean, if you think about it, most startups fail. We're risk takers. We evaluate risk and decide, what to go for, and so just by the nature of that, it makes them kind of a lousy risk reward trade-off. So there's that piece. Then again, the piece of, well, they're usually starting at zero. They're starting at a concept or an idea. Well, that means we have to use our resources and expenses and dollars up front for something that may pay off later.
Right.
So that means in our world that we need to subsidize that with other products and other profitable lines of business. So there's a little bit of misalignment between an incumbent and a startup. We measure ourselves on combined ratio. What we did today, what we actually did and wrote. A lot of startups will measure themselves on proof of concepts and things that they could do. And once they proved a concept, this is the scale. That's what makes it attractive. So it's just very different. And also the last point I'd make about it is sort of this, I guess it's a first mover versus fast follower debate. In a world or in an industry where there's a real lack of patent protection, trademark protection, copyrights, and actually you have an industry where the regulators even want standardization. They basically encourage copycats, so that it's easier for people and insureds to understand. Just makes it challenging. So, you either have to do something first and stay 2 steps ahead of everybody, or some people choose to sit back and see if it works out and see what the lessons learned are. Not that they're all public or transparent, but and then come in and after. And the industry's big enough that whatever, being second, third, fourth, probably still
plenty of room.
So again, it makes it challenging, but that's not acceptable to us. We want to be doing new things all the time and always looking for better ways to do things. So we've chosen to do it this way.
Yeah. It's just striking me, like if you file a patent, you're making your secret sauce public, right? But then it's protected, so no one can use it. If you file your rate and form, you're making your secret sauce public. And then there's the Me Too filing process. So like there's even a mechanism to facilitate copying it. So it's like totally different. But either way, you got to put it out there. You just, one, you have protection. The other, you kind of have the opposite, like facilitated copying. But I get the point. It leads to standardization, which is a good thing from a regulatory standpoint.
Yeah, I mean, we've had scenarios where we've tried to take a unique approach to either form, coverage, or pricing, and file it. And the response was, well, you don't have a book of business to validate it, right? Yeah. You don't have the history, and so we've approved products that sound similar, and here's how they priced it. So it's awkward for the regulators to approve 2 things that look conflicting. So they would encourage you to go toward the others. And it varies from state to state.
Yeah.
But the spirit is they want transparency. They want it to be very clear. They don't want it to be discriminatory. It's all very well intended.
Yeah.
But it does, create some complications for innovation.
Yeah. No, of course. I do want to get into kind of where you see things headed, again, because you get to see a lot of the early stuff that's brewing and new ways of addressing the market. We talked about like Thimble it's a distribution story. It's a story about how risk in its nature from a time standpoint is changing, and how do you sort of divvy up the units of risk transfer so that you can meet that better. Counterpart, there's technology in the underwriting and rating and how you engage with the insured to get them to be a better risk. There's other, sort of like what's the material advantage? Like you've got these theories or theses, I don't know what the right word is for all these folks. So you're seeing a lot of what's going on. Where are things headed? I hear so much around the risk transfer versus risk mitigation and the movement there. Is that where you see it going, or are there other things brewing that you think kind of 5 years out that'll be more normal in the industry, or maybe longer?
Yeah, I mean, it's a lot to chew on there, but I don't know that we go in with any hypothesis. We're just trying to find insurtechs or new programs that do this or that.
Yeah.
But it's really, are you making us better, faster, smarter, cheaper, right? I mean, are you taking friction out? Are you lowering the expenses? Are you improving risk selection? Are you mitigating losses or preventing them? And if you're not doing any of those things, I'm not sure what value it brings. I'm seeing a lot, unfortunately, where they've come into the place sort of trying to disintermediate or interrupt or disrupt the process, and they may have tools that make something easier for one of the parties in the transaction, but they're really just layering on.
Yeah.
Sometimes there's enough value in there that makes sense, but sometimes, I mean, the insured's not going to win in that, in that formula. It's not going to be, it's certainly not going to be cheaper for them, because you might have taken the friction out of a particular part of the process. You've added layers, and presumably everyone needs to be compensated for the value that they bring. So, we truly try to think about it with the customer first. But, with the 2 you mentioned, with Thimble and Counterpart in particular, one with Thimble said, the first part of it anyway. They do more than they've expanded over time. But the first part was, why do we sell policies that are just annual? That doesn't meet everyone's needs. Some people have side work or seasonal work or gig work or whatever you want to call it. Why can't, if they get their work in different chunks of time, why can't they buy their policy there? So that we were trying to solve an unmet need, and it's been quite successful. With Counterpart, as you point out, they're looking to, hey, instead of just sell them a policy, for a year and wait till month 9 or 10 to start talking about the renewal and see if anything's changed. Yeah. Why don't we? I mean, they do have some cool tools to help with risk selection and prospecting up front, but also we'll engage with them over time. We'll bring value and resources to these insureds, particularly the small ones who would not have these resources, make them a better risk, make them see the value or allow them to see the value in their policy. And then it really is a win-win-win, right? The insured gets a better experience, the carrier gets a better result, and they become a meaningful part of the equation in the sales process too.
So as you look at kind of where things are heading, what do you see? Do you see that it's like, is there a theme to the kinds of solutions that you think will be coming online, or that will be, those are startups that are trying to make a name for themselves? Do you see the incumbents starting to adopt those things down the road?
Yeah, so the one sort of theme I would say, or how I would describe it at the highest level, is I think there's a big flight to quality going right now. It's who are focused on the fundamentals, not just top line growth, not just how many people can we hire and how big of a team we can build, and how sexy can we make these tech tools, but really, have you focused on the fundamentals and are you actually making that happen? There's seems to be a really big change in mindset for the VCs and within the fundraising. It's definitely harder. But even when we've seen that pull back some, the numbers are still pretty big on what's coming into the space. People still see plenty of room to, for this runway. But again, it gets back to, fundamentals. I mean, people who sold the most is not that interesting anymore. Of course, we've seen some things in the industry with, IPOs, which are oftentimes a goal for these, and several of those that have hit a lot of headlines haven't gone super well. So it's been discouraging for, slowed down the money. But again, I think the ones who really had, again, solving a real problem, adding value to the equation, and enhancing it are going to do really well. And that, I mean, that's who we're looking for. Does this make sense? Where's the value added? And then how do we sign up to help make it happen?
So Scott, in addition to some of the company side, like thematically, what are some of the things that you see coming? A lot of the buzzwords we hear, like what are the things that you're seeing?
Yeah, so two concepts that I really love that I talk about a lot, but it's the first would be continuous underwriting. And I mentioned Counterpart, they'd be a great example of that. So in traditional underwriting, we take a snapshot of a company at a given certain point in time, and we agree to write the risk for 12 months. And if there are no claims and nothing happens and there's no endorsement activity, whatever, we really don't engage with them until renewal time. Yeah. A lot can change in 12 months, as we've certainly seen through the last couple of years, but particularly in small business, which is a lot of where we play. So, so first you're just smarter and you get to know your insured better. Second, you have opportunities like with Counterpart where you get to engage with your customer and bring them some value beyond just the certificate of insurance and the contract you've sold them. But anyway, just love that concept and think it makes a ton of sense. Seeing it most in cyber, I think just about all of the cyber insurtechs, but even the incumbent carriers are doing some element of that where they're scraping for vulnerabilities. They're if they're aware of some type of hack, they're figuring out which ones of their customers have it and helping them patch or whatever it is. That makes a ton of sense to me. And the second concept, which is certainly a buzzword, as you said, is embedded insurance. And, and that, of course, makes sense. It seems so obvious because if someone's making a transaction and you already have all the underwriting information there, and they're going to need insurance, why not just sell it? If your realtor's selling you a house, they know how much you paid, what it's made of, where it is, et cetera, et cetera. And then you need mortgage insurance, and then you sort of have to start that process from scratch. And there's plenty of examples like that. A custom home builder builds your home, same thing. They can sell you risk or commercial property or liability, or homeowners. But what the point that misses is you have to have a licensed agent to sell insurance, and so often at point of sale that can't happen practically. So there needs to be some way to hand that off, create a separate transaction, and engage with an agent, whether it's a digital agent or a live agent. But I think a lot of people come outside of the industry and just don't really appreciate that regulation and rule exists. And then, when they try to create a process that works, it gets a little bit clumsy or cumbersome, and it's not quite as seamless as you'd hope. But there are examples to do that. I absolutely think it's a theme we're going to continue to tackle as an industry, again, because it just makes so much sense. The underwriting is already there. It's in real time. No one loves to go make that separate transaction and engage separately to buy insurance. So I think it'll come, but that takes some working through, and I don't know if it'll result in any regulatory changes, but because it does make sense to me that a licensed professional should be advising their customers. But interesting concept for sure.
It's not as simple as, why can't you just sell the insurance automatically, kind of secretly through the core process, like the core product sale or experience sale. I would say when you hear the word just, what you're about to hear is an oversimplification of the way things are, but you can solve for it. It's just more complicated than people may think. And I think you're right. It could be something regulators have to engage in to see, like, what is the right answer for consumers, that experience versus, needing the guide, needing the expertise. How do we balance those two things, and what's a better net result for the customer? And it's going to differ in different situations or different customers for sure.
Yeah, and I always kept using the term, selling the insurance, but it's really the sales, solicitation, and inducement of coverage. So, and it's probably arguably loosely defined. So it does get more complicated than that. There have been exceptions though, with things like warranties, in the car business. So, maybe some regulatory changes could help facilitate that. But until then, we just need to get creative but certainly. Stick to the rules. We take a lot of, we have some uncertainty in our business and take some risks, but compliance risk is not a place where we like to play. So, but I think generally speaking, when it makes sense for a consumer and it makes sense for the industry, regulators are open to having those conversations. But certainly got to play by the rules in this business.
What about for you and your team? Do you think your model will stay the same? You started a while ago. It was just you and Trent Cooksley back in the day, and now you've got more of a team, and Trent's at Cowbell now. Do you see an evolution for your team or what you're doing, or is this model and sort of operating a bit on the side from Markel, but with support and with resources, is that the path ahead?
Yeah, it's at this stage, it's really just more of the same, right? We've written a substantial amount of premium. Bottom line looks good. We're learning a lot of things along the way. Again, it's additive and accretive to Markel. It's as much of a growth strategy as anything. I'd say growth and learning opportunity. So we're not trying to cannibalize our products. We're not suggesting we're doing things wrong or poorly.
You're not disrupting yourself in this model. That's not the point of it.
Exactly. There were early conversations around, do you really go with this new co-concept and start it all over again without the legacy issues? And there was just too much value in the parent company and the people and resources that we had. At least that was our opinion. And it seems to be playing well. So we don't think there's any shortage of ideas out there. There's plenty of program opportunities. So, everything will probably become more digitized over time. So maybe there's not as clear of a line on what's InsurTech versus a traditional program, but we all figure that out and work it out together too. A big part of our role, particularly on our team, is quarterbacking people and making introductions, right? When they come in, that's not really a program. That's not really a new, you need more than the paper capacity, or you want just an off-the-shelf product. Then we make the introductions to those people. And there's a lot of value there too.
Yeah.
When we look at our top and bottom line as a unit, that's only one piece, where we've made introductions which help elevate others throughout the organization. That's where the real benefit to Markel is in the investment we've made in the space.
Yeah. There's a lot you're saying that I totally agree with. That's not to imply that there's things you're saying where I'm like, oh my God, he's totally wrong. I do think it's really easy to think we're stuck because of these, the legacy mindset systems, like whatever else you want to say. And I think that's one way of looking at it. There's another to see like, that's a huge set of resources and assets. What if there was a way to, use that as an advantage in doing something new or getting access to something new, instead of just seeing it as this like huge but profitable dead weight? It's like, imagine if you used all those assets to move ahead. And I think that's a really brilliant opportunity for the industry. And it's really cool to hear how Markel has structured things to be able to do that. Have the core business really strong, great size to it, but also be able to kind of, find ways to move ahead from those resources and assets.
Yeah. I mean, for us, it's just, it's to some extent, it's just putting as many irons in the fire as we can. Again, it's a big learning opportunity for us to, figure out what's going on, what's working, what's not working. Again, some people come with some really good ideas and they just don't fit our model very well.
Yeah.
A perfect example of something that's very highly commoditized, or we would view it that way, as far as like a standard homeowners or auto. And there's people doing that really well now.
Yeah.
It would take a lot to convince us to get into something. We look at that commoditized, just hasn't fit our model very well.
Right.
But we know that, some of our partners want to expand faster than we want to expand. Some of them look at it and say, well, hey, I'm in this little niche, but wow, the market is humongous. And we say, we're pretty comfortable in the niches. That's where we've made our headway, and where we feel like we can make our margins and we can bring our value to the table, our expertise and specialization.
Yeah. That's great. You are doing some really cool stuff. I always appreciate getting time with you because, and invariably you always ask me, it's like, what are you hearing? I'm like, oh God, I'm not hearing anything like what you're hearing. I feel like it's a very one-sided conversation, but Scott, it's great to get some time with you today.
Yeah, no, I appreciate it. It's always good to connect.
Thank you to Scott for spending some time with me, or some more time with me. Scott and I get to catch up every now and then. And our joke for us is we book 30 minutes and tend to go 90 half the time. And that was going to be the hardest part of this conversation, was just keeping it contained. But I think we pulled it off. He's in such a cool position because he does get to see a lot of the really neat things that are going on, new approaches to the market, new ways of solving the idea of transferring risk, meeting the needs of insureds, helping with distribution solutions, just many of the new things that are going on. And he's sort of at the center of seeing a lot of them, but also supporting them, making them happen. And I think it just gives him a really cool perspective. So I appreciated getting the chance to bring that to all of you, and hopefully you gained something and found it interesting. I think the model that Markel has used is one a lot of existing carriers could be thinking about, is how do we participate without, necessarily being hamstrung by our current structure and, resources or hurdle rates and bars that we set for what is business we should be going after or not, but at the same time, not being totally divorced from all that, because that is resource and that is capabilities and knowledge and access to the market that could be really beneficial for some of these new ideas. So it's a need to balance those two things off, and not just swear one off for the sake of the other. They can interplay, just like, we're always saying, in InsurTech, just being from the tech side or just being from the insurance side, you're going to be missing something. So how do you balance things out? Everything's about balance. So I hope that the conversation with Scott was valuable to all of you. Thank you to Scott and the team at Markel Insurtech Underwriters for giving him up for a bit. It's great to get more time with him. I hope that you all enjoyed this. Make sure that you are subscribed to the show in whatever platform you're taking it in on, whether it's YouTube or Apple Podcasts or Spotify or Stitcher or whatever else. Hit the subscribe button, hit the like button, leave a review if you can. If you find this valuable, take a few seconds, leave a review. It's really valuable. That helps drive the discovery of the show to even more people. And of course, you can share it with people in your network that you think would benefit. And that would mean the world to me. The more people are taking these ideas in and getting exposure to all the different folks that I bring on the show, the better for our industry. So I would be so thankful if you'd all do that. And with that, I will say goodbye, and I will see you next time for another episode of The Future of Insurance. Thanks, everyone.